What an epic run that Apple, stock symbol AAPL, has been on over the past couple of months. I mean, it's really just been epic. I mean, there's really no words to describe what you're seeing here. You're seeing a company that's almost worth $3 trillion, aping higher like it's some kind of altcoin. Despite a difficult end to the month of November and start to December, Apple has been up 14 out of the last 18 trading sessions. It's up 11% just over the last 5 days and 26% over the last 2 months. And if Apple repeats what it's done over the past year, climbing over 31%, that'll make it a $3.7 trillion stock this time come next year. I bring all this up because one of the big questions people are saying is, should I just throw in the towel and buy Apple stock right now and just forget it? Should I just go ape into it just like everybody else is doing? I mean, look, when we have a sell-off, the stock goes higher. When we have a rally, the stock goes higher. Apple has single-handedly kept the S&P 500 from falling apart when the S&P 500 was rallying. This thing was either just selling off a little bit or it was climbing to new all-time highs, and not just marginally, but in parabolic fashion. And it's a good question to ask, but what I'm going to do here in this video is go over all the technical analysis, give you a better perspective of what's actually going on so that you can have a good educated understanding of what's going on with the stock from a technical analysis standpoint and can make the best decision for yourself and your portfolio. First, make sure you smash that like button and subscribe to this channel so you can get more notifications about any time I do one of these new videos. And check out my YouTube membership down below by clicking on the join button. You'll get all my market research each and every day delivered to you. You're going to get the best charts of the day that I come across. You're also going to get my daily watch list, my weekly master watch lists. You're going to get all the FANG updates each week, as well as updates on the S&P 500, the NASDAQ, and the Russell 2000. So check that out by clicking join below. Let's go to the charts. For more than a year now, we have been trading inside of this rising channel. It's been very orderly and constructed very well. When it touched this upper band, it pulled back. And we've seen it touch it multiple times and pull right back. But then, without actually testing the lower channel band, it did something completely different. You see, it formed this cup and handle pattern. And cup and handle patterns, they basically look like the shape of a cup with a handle on it. You have here your cup, and then you have a handle. It's kind of like a sideways consolidation pattern. But if you imagine what it looks like, it's like one of those nice little espresso cups that you drink from in the morning. This is usually a very bullish setup. And when it broke out of this trade setup, which would have been right through this resistance level that I'm drawing right here, it didn't just go up a little bit, test resistance, and come back down to the lower channel band. Far from it. In fact, it broke right through it. It didn't do it perfectly because you had a nice attempt right here. It looked like this one was headed off to the races, but it pulled back because there was a lot of market weakness also starting to creep in across the board. But it didn't sell off in a big way. It just consolidated. Attempted to break out once again when people were flocking to the safety of Apple when the market was selling off 80, 90, 100 points in a given day. And then it broke out, pulled back, didn't go all the way back down to this channel band. And then over the last 5 days, when this market finally did bottom last Friday, it went straight parabolic. So a lot of people feel like, okay, I missed the ship. Do I need to get in now? Look, it's broken through this resistance. It's a breakout play. But I want to give you some different looks at this stock. I mean, when you look at it from this perspective, guys, this thing is broken right through every layer of resistance that I can even come up with. But these resistance levels are very, very difficult to hold on to. So if you're playing a breakout of a resistance level that's on a steep incline like this with a strong slope, there's a very good chance you're going to see it come right back down. And then it's not really a breakout at that point. It's just falling back into the channel. Yes, it may not lose much of its gains in the process, but it's still not a breakout play. And I'm always a big stickler about planning out your trades and trading them in a manner that follows the plan that you've laid out before you ever get into the trade. But check out what happens when I add the Bollinger Bands and look at it from a weekly chart. Here you have the weekly chart of Apple. I'm going to go ahead and just get rid of this resistance here. And you'll notice it broke out of this upper Bollinger Band right here, gave back a little bit, not a lot, tried to break out again, struggled with it, but this week has been completely different. I would suspect that maybe Thursday or Friday, we'll start to see a little bit of consolidation because there's really not much precedent for this almost an entire candle body outside of the upper band of this indicator. If we just go back through time, what are you seeing here? You're seeing multiple attempts to break through and some hard selling that followed the week thereafter. Again, breaks above it, hard selling the week thereafter. You had a little bit of a run right here, but nothing like what we've seen this week. So it wouldn't surprise me if we see a little bit of profit taking Thursday or Friday, or at least one of those 2 days, because this candle is massive and there's just no precedent for it. And we're not talking about something like Square or Twitter or something that can make some big runs, or a Tesla or Lucid. We're talking about a $3 trillion stock almost. To put it in perspective, the amount of market cap that Apple has added to its stock this year is more than the entire value of 492 of the 500 stocks on the S&P 500. I'm not talking about cumulatively, I'm talking about each one. It's just the gains from this year in terms of market cap is more than the sizes of the companies of all but 8 of the 500 stocks on the S&P 500. Massive. But again, looking at these bands here, there's precedent for there to be a potential sell-off. Maybe not this week. And when I'm talking about sell-off, yes, I think we'll probably see some profit taking either Thursday or Friday, but I'm talking about a little bit more of a pullback than just 1 or 2 days of selling, because this band is out of control. So where would you look at getting in on Apple? Well, you have to assume that if Apple does sell off, it's going to bring the whole market with it as well. And because of this breakout level that it cleared on the weekly chart, I half expect it to pull back to it and at least test it. Now, if you're a very aggressive dip buyer, you're probably looking at a retest of this support level around 163 to get long on. If you're a more conservative dip buyer, you're looking at a retest of this rising channel at around 140 currently, but by the time it got to there, it'd probably be somewhere between 145 and 150. So those are your two options. Do I think that you just go ahead and put a buy order on Apple when it's this parabolic? Absolutely not. I mean, the volume has been tremendous. It's been a safety stock over the last couple of weeks, and it's held up very well. But you got analysts right now too, and it feels like it's a daily basis where these analysts are coming out and they're trying to ape all of the retail right into their stocks of choice. You have one coming out saying, oh, it's going to 190. And then another one comes out the following day, says, oh, it's going to 200. It's like they're one-upping each other. And guess what? If it gets to 190 or 200, what do you think the analyst is going to do? They're going to say it's going to 220, and the next one's going to say it's going to 230. Gets up to there, they'll say 270. That's great if it does it. But these analysts aren't geniuses. They're very reactionary in the sense that they don't actually raise their target prices until it becomes extremely obvious. And probably what you're seeing a lot of banks do right now, they're probably liquidating a lot of their shares to you at these extreme levels, and they're getting you guys to provide the liquidity, the retail traders who are going to follow their upgrades or price increases to keep pushing that stock higher, and they're going to sell you their shares. So don't do them that favor. Be a little bit more prudent when it comes to a stock like Apple, where you've seen a massive gains over the last 2 weeks, 26% on a $2.8 trillion company. Give it a little bit of a break. Let it pull back some, and you may be able to get a better opportunity. Is that a guarantee? No. But in all my years of trading, anything that goes up does eventually have a pullback, and it gives you a better opportunity to get long at a much more manageable price. So the takeaway on this video, okay? It's very tricky to know when to get into a stock. It's very easy to say, hey, let's just go ahead and get in. It seems to hold up in a bear market pretty well. And I wouldn't fault you for doing that. But as traders, we want to look for opportunities. And I don't know if really Apple at 175 is giving us that opportunity right now. It's becoming very obvious that a lot of people are piling in, and it's going to create likely a lot of future bag holders at 175. Now, would I be selling it if I had gotten in at like 100 or 120? No. I would probably raise my stop loss, but I wouldn't be trying to liquidate the entire position because I want to see how far the winner will run. The problem is getting in right now is, where do you put the stop loss at? How do you manage risk appropriately? Because at this point, you're looking at a 10 or a 15% stop loss. And in order to justify that, you need about 2 to 3 times the amount of that for a reward to justify the trade. And I just don't see it being there. And if you enjoyed this video, I'd encourage you to like and subscribe. It continues to help me to be able to reach more of an audience. And let me know in the comments, what are your plans with the stock? Are you buying, holding, selling? What is your plans going forward? And how did you do this week? Let me know down in the comments below. Thank you guys, and God bless.